Okay, hi everyone. So this video is meant to help you with interpreting financial ratios. You would have already learned what financial ratios are about in class. This video is largely for your assignment and on how to answer exam questions. So you already have met some of these objectives. You should be able to state the three types of financial ratios. You should be able to explain the purpose of all the ratios. You should learn in this video to interpret the ratios. For your assignment, you only need to know how to calculate the ratios. Yep, that's quite a lot. So in this video, bear in mind that this is largely for answering exam questions. So a quick recap. What is financial ratios? This is what it's meant for. The first type of financial ratio is of course the liquidity ratio. And there is only one liquidity ratio, which is the current ratio. You already know that this is about how the company is able to pay off debts. So the formula is there, you don't have to know it for your exams. The second type of profitability ratios, the second type of ratio is profitability ratios. You have a few under this. One of the most common one is gross profit ratio. So obviously this is for you to know if your business is profitable, but this is before you incur expenses. So it will tell you how much you have before paying off your expenses and how much profit you'll get if you sell off your inventory. So again, formula you don't have to know. The other type is net profit ratio. So it's the only difference between gross profit and net profit ratio is that net profit ratio, you have already used your profit from your gross profit to pay off your expenses. Formula is there, you don't have to know. Another type of profitability ratio is the expenses ratio. So this is how much you use. That is to say how much you spend or amount of expense for every dollar of the income you earn. Okay, so it's to help you understand how much you are spending. Alright, I think this is the last profitability ratio. It's called return on equity. So it's how much the owner makes. So this is very important for shareholders to know. So they want to know how much the investment is making. Use return on equity ratio. Now, the third type of financial ratio is stability. And under this, you have what we call debt to equity ratio. So this shows you how reliant the business is on debts. So you guys already know all this. Okay, so now what we all want to know, especially at this point, how do you answer WACE questions based on this? So the first thing that you have to do is you have to figure out the information. So identify what exactly the question is asking you, and once you know what they're asking you for, define that ratio. Okay. Second is you've got to interpret the data or ratio. And third, which a lot of students tend to miss out on, what does the interpretation mean to the business? What is the effect of it to the business? So I'm going to show you some examples now. So I've shown some of you in class. Essentially, I'm using Nestle still, but I'm focusing more on how to interpret. Alright, so let's just say we already know after calculation how much all these ratios are. So let's say Nestle's current ratio you have here 88.33%. So remember, what is the first thing you have to do in answering these kind of questions? So number one, it's always identify, or we can say define. So obviously here you define the ratio. Current ratio. So current ratio is a liquidity ratio used to measure a business' ability to pay its debts as they mature. Now that's one. How do you continue interpreting or answering this kind of question? Number two, you actually interpret. So what does the data mean, 88.33%? So it actually means that in this case, this company, Nestle, has 88 cents of current assets for every dollar of current liabilities. So if you actually know the formula, it's quite obvious. It's current asset to current liability. So 0.88 current asset to $1 current liability. Okay, now the third thing is the one that's very important. What does this mean for Nestle? So actually this is a positive thing. So this is not a very good thing because they have very little current assets. So Nestle Group may not be able to pay back short-term debts. So that's the conclusion of what the data means. Okay, so now moving on, we are going to employ the same strategy If you feel you're confident, you can fast forward through this video and just take a look at how you interpret and what the trend means. Alright, so the next one we have here, gross profit ratio. We are given Nestle has a gross profit ratio of 49.62%. Identify. What is the meaning of gross profit ratio? So we already know this. It's used to measure the business profitability, and this is before expenses, and how profitable it would be for Nestle if it were to sell off its inventory. So remember, the second thing is always interpret the data. So here it basically means for every dollar of sales, Nestle obtained 50 cents of profits, which can be used to cover their operating costs after paying off its inventory costs. So same thing again. The formula is gross profit to sales. So you can see here gross profit to sales is 0.5 to $1. Okay, so what does this mean? Since the gross profit is positive, it means that Nestle can cover operating costs after paying off its inventory costs. Alright. So another profitability ratio that is popular, and they like to ask these two together, gross profit and net profit ratio. Given to us here, 10.66%. Identify what does it mean. Net profit ratio is used to measure business profitability after all expenses have been paid. Interpret, what does it mean? Again, you can see from the formula even, net profit to net sales. So the bottom one is always $1. So it depends how you want to phrase it, which one comes first. So for every dollar of sales, Nestle obtained 0.11 cents of net profits. So Nestle managed to convert 10.66% of sales into profits. So obviously this is a good thing, which means that they can convert sales into profits after paying off all the expenses. Now here, let's just take a look at the difference. You can see here, I'm using the mouse. Gross profit ratio of the same company, Nestle, is 49.62%. Somehow, for net profit, it's a lot less, about 30% less. So what happened in between here? I think it's quite obvious from the definition, obviously, that this difference has gone into paying off operating expenses. And for Nestle to spend 38.96% of profits on operating expense, it indicates that it's quite high. Okay, so a better sign for Nestle's profitability, obviously, if their gross profit and net profit are high, but there's not too much difference between them. Alright, moving on. I'm going to go a bit more quickly now. Expenses ratio, same thing. You have here given to you 37.02%. What does expenses ratio mean? Interpret. Okay, so you can still actually use what we have talked about before this. In fact, WACE probably prefers that. So for every dollar of net sales, Nestle uses 37 cents of sales revenue to cover its operating costs. Okay, the trend, since it's a positive, it means they are able to cover operating costs, so that's a good thing. Okay, moving on. Return on equity, so given here 14.8%. Definition of return on equity ratio, what does it mean? This is pretty straightforward, and we are looking at positive or negative, so this is good. Shareholders get to receive some dividends. It's not a negative. Okay, debt to equity ratio, given here 93.78%. So first thing again, identify. Second thing is, here you can see that a high percentage of, for Nestle, uses a high percentage on funds, on debts. So a lot of their funds are dependent on their debts. So this is not actually a very good thing, because it means Nestle has to depend on their borrowing. Alright, so now you guys have to prepare for your WACE. So this is an example of a WACE question from 2015. There are a few more in the next few years. The only time that financial ratio did not come out is in 2017. Alright, so it's quite a popular topic. So make sure that you master this. So try this out, and you are encouraged to bring this into class. Okay, so that we can discuss this. Bring it in with your answers. In the next class, we are going to discuss the answer to this question. And please bring your relevant part of the assignment into class related to financial ratios. That's all. Thank you.